Hey, what's up everyone? Welcome back to the XForceGlobal channel. Today we're going to be taking another deep dive into the Bitcoin chart from our last analysis a few days ago. For those that are new to the channel, welcome, and for those that are returning, thank you very much. I know these Bitcoin videos are pretty well received, so I'd like to remind you to subscribe to the channel if you haven't already, turn on the notifications, and give this video a like for continued updates to let me know that you are interested in these Bitcoin video updates. I am tracking it. Now moving right into the charts, everything is currently progressing pretty nicely since our last update with no significant deviations to report. We had a pretty solid bounce off of the lows, and we are kind of back on a repeat of trying to find once again another continuation idea for the trend to the upside to finish off our primary degree wave 5 in yellow for this bull market. I know this can be quite exhausting if you are a bull, more so as a bear, but please hang in there because there is a lot of evidence for the bullish idea. A week or so ago, we anticipated the same wave 3-4 pullback to complete at a higher level. However, the price has since breached its previous low. And despite all of the panic that we are seeing in the markets right now, I do believe this low is still suggesting that we may have identified another potential bottoming structure. Despite all of this, I remain aligned with the higher probability bullish narrative when viewed from a macro perspective, as we did hit one of the first confluent zones when we are strictly speaking of the Fibonacci levels for wave 4. So the general breakdown is that wave 4s will typically find support around the 38.2% level, even the 50% level, or even the 61.8% level, and really even all the way down to near the invalidation of wave 1, which is occasionally observed in the cryptocurrency markets more so than not, where we have a deep wave 4. But anything beyond the 50% on the macro may be indicative that an alternative structure might be playing or forming, possibly as a more complex structure. And as you can see, with the current price action, we have reached that 38.2% Fibonacci level at around 49.1K, which suggests that a potential low may be forming once again, like I have said. However, if the price does break below this level, and more so of the 50% level, a reassessment of the situation should be considered entirely if we do break it with confidence. On top of the Fibonacci evidence, we have another piece of evidence that is going to be the CME gap above us, which is the hot topic that everyone is talking about, and rightfully so, because it is typical to see large CME gaps to fill sooner than later. And statistically, over 99% of the gaps on the one-day time frame larger than $1,000 is usually going to be filled sooner than later. And we seem to be right around the corner to fill that gap. We do have another gap at 20K or so that never filled, but that is an anomaly. But interestingly enough, I do believe that the gap will also get filled down the road in the next bear market, I would say. So make sure to stay tuned for how I will interpret that once we start concluding this bull market cycle that we are in right now. Now, zooming right in, just like I mentioned moments ago, I do believe that we are concluding or have concluded a wave 4 based on the current data given, and for the fact that we have many ways to interpret the pattern of how this wave 4 has terminated. It's pretty much all the same variations, ladies and gentlemen. I think we're focusing too much on whether this is a flat, whether this is a zigzag, but doing the measurements again, this is a normal zigzag. I have been looking at a normal zigzag or a multiple zigzag or a double correction pattern, which means that we have a multiple zigzag where we have wave A, B, C going into wave W. We have the same flat idea for wave X and for wave B, and then we are looking for an ABC going into wave Y, as wave Ws and wave Ys are also comprised of simple zigzags. We're looking for a leading diagonal going into wave A if you are seeing this as a normal zigzag, and the C wave is going to be alternatively different to this wave Y, as this wave Y is an ABC. We're looking for a 5-wave structure into this wave C. So how is that constructed? If we take a look, okay, let's look at first the ABC scenario where we have that diagonal going to wave A. Again, we have an 3-3-5 structure. This looks like an A wave that's extended, and then we have this B wave as a triangle, and then a short wave C going into that wave A. Remember, flats are comprised as 3-3-5 structures, and what that means is we now have to have wave A as a 3-wave structure rather than an impulsive structure. So we have a long wave A, B, and then a short wave C. No problem there. ABC going into wave W, X, and then an ABC going into wave Y as well. That finishes off our B wave. No problem there. New price extreme. And then we have the same impulse that we've been talking about for the past few weeks going into that C of the B wave. And then we have that impulsive structure to the downside. Let's check in hindsight if this is working. Yep, it looks like it's completed as a 5-wave move. I would say this is the best way we can count it because it does look impulsive, right? It's just how we're going to be labeling the internal structure for this wave 3. And I think this is the best way that we're going to be counting it right now. So going forward, I think that this impulsive structure looks like it is now completing this intermediate degree wave 5. And if we look at the WXY variation, same idea, right? The same idea for how this termination is going to be complete. It looks like wave A, B, C, and the C wave is really extended, really. But still, it's the same termination idea. We have a 5 through 5 into a wave A, B, C as well for this wave W. Same idea here where we're looking for, this should be changed as the same kind of 3-wave structure as a flat where we have a 3, 3, 5 being built here. And then we should be more or less be complete as well. Because from what I remember and how I was looking at it earlier this week, is that looked like we were looking for some kind of diagonal being completed here. It looks like we have completed a diagonal of some sort, right? So it looks like it's a 1-2 being built here. Now we're going to be continuing to the upside. It looks like price is looking for further ups. I was actually looking for a 5-wave move here, an ABC, and then another 5-wave move down here before we would continue up. But it's okay. Alternatively, we're looking at the same idea here, which is very important. Now, I think the biggest thing here is how are we going to be looking for a bearish alternative structure? The reason why I am seeing this as a completed wave 4 is because that if we say that the wave 4 is still being in play, really there is no way in terms of the comparison of this wave 1-2 is going to be subjectively acceptable to have this wave 4 larger, not only in time by a lot, but also mega in size as well. So if we look at the wave structure, it just doesn't seem to have the right look, right? And you always want to be working with at least some kind of okay look, at least for your motive and corrective structures. So right now, it seems like this wave 4 of the intermediate degree has completed, and this is the impulsive move to the downside overall to complete that move here. So it looks like we're looking for some kind of diagonal being completed here, and we're looking for either some kind of sideways structure for a wave 1-2. We'll have to see with the data given going forward, but it looks like Bitcoin is really setting us up to fill that CME gap to the upside, right? Hybrid wise, if this is a wave A, alternatively, this could be an ABC to the upside, but it is kind of hard to find some kind of structure to fit in. Maybe within that WXY scenario, maybe we're still working within a larger ABC to the downside where we're still working on wave Y. That would be my only option left in terms of the reserve. So going forward, ladies and gentlemen, I think that we are still looking for a bullish continuation to the upside. Nothing too much to report in that sense. I do think that the move to the downside that we had in this past week, say it's a blessing in a disguise. Like I mentioned, we did hit a lot of the major Fibonacci extensions. Even if you're seeing this based on the trend-based Fibonacci level extensions, we did surpass the 100% level, but we did trade above it, which is interesting. But anything between the 100% and the 161.8% is a very good level for a C wave in relation to your wave A as well in terms of the length. So hopefully that was helpful, ladies and gentlemen. I will see you guys in the next video with another great analysis. I will see you guys. Make sure to subscribe to the channel if you haven't already. Also, again, if you guys want to join the membership, the description is in the link below. Also, if you're not following me on social media, please do give me a follow at XForceGlobal on X. Thank you very much. I'll see you guys in the next video. Bye.